Hello guys, glad to have you on board again. Today we're finally going to take care of the MCQ test correction. 1 week late, and sorry I had to delay for some health conditions. But anyway, let's get things started. I just done it for the French users, so as a quick introduction, this one was pretty much orientated regarding range territories and range contexts. So I just wanted to somehow do two things, test you and test me, because those MCQ tests is definitely not just like a school teaching method in which I basically get to test you guys to see if you're good or bad. No, it's more likely to see where you have flows, where I need to improve myself and working on this. So I'm also testing myself within those tests. Reason why I told you last week that I was willing that most of you guys would answer those MCQ tests because they really help me targeting the educational content the best possible way, at least the way that suits you the most. So if you want me to help you, then you need to help me at some point. That's really how it works. And the more I learn from you, the better I can be to help you out. So anyway, I can get to the conclusion because I just made the correction for French. For the Frenchies, and yes, that's pretty much not that bad, and I'm really even, let's call it that way, positively surprised, because I was dealing with range context in here. Some are very complex and complicated, and I was pretty happy to see that most people did good answer in there. So like 2/3 of the community, not to say 3/4, are really doing it nicely. And I mean, that means most of you guys are clearly mastering range trades right now, or at least you're good at them. You can always be better, and time will just make it better, but at least you somehow master them already, and that's pretty great, because I thought it would take a little bit longer than that for most of you. So anyway, let's get into it. And we'll review your different answers. So it's mixed within the French and English community, so I can tell who's been giving this or that answer. I'll eventually do it just like I done the last time. I'll go public with the results. Like normally, I think I can publish the results in a Excel sheet. So you're basically gonna have to have a look at your own results in there. I'll probably publish that later today. Anyway, so the goal in here is not to have good answers. Remember that there are multiple answers, and what I care is mostly that you don't do bad answers. Right? So there's multiple, generally 2 or 3 good options, and generally no more than that, and there are generally a few very bad answers, like things that cannot actually work. So the process in here is that you first have to choose between the range context, between the context you identify, and it's either the ranges being neutral, bearish, or bullish, or the trending context in which I ask you to try to identify the maturity, and the final, the excesses and bubbles context in which the market is simply getting excessive. But these are all the options, and obviously others, this is just noise, and you just don't know what the hell you can be doing with that. All right, so think of it as areas. Okay? This is for range. All right. If what you're dealing with is a range, I'm trying to ask you to identify if the range is a neutral context, bearish or bullish. And today I think I'll help you really getting clear of them, even though most of the answers have been doing good. The trending context, but this is definitely not today's purpose. Right? I haven't been dealing with trends. We'll eventually do them in a forthcoming podcast. Anyway, so let's get it started. Question number 1. So what is that? We're going to use the same old process. All right, like you always need to follow this thing. All right, first of all, you have a look at your price, sine wave. You got no momentum in here. All right, but you clearly can see the momentum divergence. We're making new highs, but not on the momentum. So even though there is not written momentum, okay, you know there is a signal in there. All right. Anyhow, the key element is to always have these price reversals, all right? So you got price reversal with the momentum divergence, cyclical activity is okay. It's just in here the algorithm somehow didn't detect the divergence. It happens a little once in a while. They are not perfect. Okay, so that being said, we're dealing with 61% retracement. The 76 is up here, so we're somehow looking for potential range context. All right, what are the elements that we need to confirm a range? We need to scroll back in time. All right, I know most of you guys, when you have to make an analysis, you're reading the market just like that, right? Like you're starting in there and you're trying to understand what the hell happened back then to try figuring out what the hell were coming next. That's definitely not the way you should do this. The way I look at the market is quite the opposite. I actually have a look at this. Now, first of all, I identify what happens in there, right? So what happens in here is the first area I have a look at anytime I get to a chart. I have a look at the technicals I have, figuring out if this is important. Then I have a look at like the 30 to 40 last bars, no more, no less. What are the technical informations I have in there? Do I have my price reversal? Do I have sine wave targets or stuff like that? This is what I do, all right? Then I have a look at the global market, but not this way, this way. I'm scrolling back in time. I'm having a look at where we are right now. We're trading with the resistant context. Anytime we try to get on top of it, we somehow reverse. So the resistant context, anytime it tries to be broken through, is resisting. So we've got a resistant context. Then we come here from the support context, in which we somehow did the same. We tried to overcome and reversed. All right? And what did we do before that? We went from the resistant context. All right, so in here I can say from bottom to top, we've got in here and the resistant context is doing its job. In here, we've scrolled through the support context, and as you can see, multiple candle closes. We broke the context in here, right? You can see this context box in here and this context box in there, and they're unfolding, all right? So we made multiple candle closes below, not just a few candle closes like that, right? Like when the market just goes there, try to close and reverses. Right, like in here is a context rejection, in here as well, in here and in here. But this, no rejection. As you can see, instead of rejecting, bam, we broke the context. So in here something interesting happened. That's what helps you orientating ranges. Right? Like I teach the beginners not to do this, but as you'll have to progress through time, this is how you identify possibilities for a range to be a bearish range or a bullish range. It's simply that a neutral range has balanced forces within. All right, this can create triangles, this can create flat structures or stuff like that, but the forces are balanced. When the forces are unbalanced, like you're gonna make lower highs and lower lows, or the exact opposite, right? These are the bullish range and bearish range. All right. In order to have those bullish ranges and bearish range, you need to have an unbalanced force. And this unbalanced system means generally one force is significantly, easily reducing price amplitude, resisting, and the other is lacking. And it's exactly what we have in here. We have a lack of bullish support in there, and we still have strong bearish resistance at the moment. So this can be a bearish range. Though if you have your signals at 61%, with a trending signal, which means in here the divergence simply suggests the bulls are losing strength and the bears are gaining potentially gaining momentum. So remember that the divergence are signals you can use for trend trade. So I can definitely think that in here is a bearish range tradable context. But this one is tricky, and I highlighted it simply because of this, because this one has no momentum. So it was easy for you to say we have no signal, but still, yes, we do have one. The divergence in here is clearly visible. We do trade 61%, at least we got real close to it. So all the beginners, you can't take that trade. All you can do is waiting for the neutral range, right? If you want to go risking that bearish trend trade, that bearish range trade, I think that's possible, all right? Because in here we're failing to break the context. We're still trading into the context, and in here we couldn't even make a candle close in there. So we just basically upper shadow candled into the resistant context. So that's fine, and we need 61%. We have it. So we're still trading in the context at 61% Fibonacci. And we do have our signal. So in here is a range trade. It's a bearish range context. We're very likely going to go risk managing, like validating the trade, your confirmation will be there, all right, and your targets will be the next support. Simple as that. You're going to take your profits anytime the market will break through the support context, so you take your profits below context. So this is exactly the kind of trade you will profit take, all right, near that supportive area, but obviously below that low, all right. You're going to make new lows. The market makes lower highs. It will make lower lows, all right. So here is a bearish range context. Bearish range, I would say yes, but especially more likely the green traders. White guys can try taking those trades, all right, but you just need to make sure that you take a very tiny position, simply because normally you're supposed to wait 76, all right. But in here, we're very likely not going to do it. Simply because we do have a shifted balance in this range, very likely going to profit the bears, which means instead of retracing 76, we're likely going to reverse out of 61 in here. Question number 2. All right, let's do the same job. All right, just like I do. Don't do what you would do. Do as I would do. Try to think whatever the hell Phil could be doing in the same place. I'm taking care of this area first. Price okay, context alert, which means in here, any fucking way, you're going to have a look at the context channel first in order to make sure that what you're highlighting in here is viable and makes any sense to whatever happens in the bigger picture. You've got the momentum okay and sine wave signal. You're overloaded, you're oversold in this cluster. So now we've got suitable informations. Let's have a look at what happens over the course of the latest few bars. All right, so we do have our triangle. We try to break through a range target, which is weird, but to be honest, this one has been a bug. All right, so this shouldn't have happened in here. This signal should have happened in there. All right, so don't consider this. I just corrected this bug, to be honest. All right? Just made the correction yesterday, so within the next update, the triangle signal will be there, right? So the square signal will be there. So square signal, we're dealing with a range target with a bullish price confirmation, momentum oversold cluster, all right, which would give you actually 2 opposite square signal in here, signaling mature range, or at least you can visibly identify the range. I very likely think the range structure is that, all right? So we'll see what that is, all right? It's a little bit complex, because it could also be something like that, like 2 sets of waves building a triangle. So anyway, we don't know, so we're going to deal as a neutral range. That's how you need to be doing these things. When you don't know, you always take the low risk. Anyway, we're below context. We're dealing with 76% Fibonacci, so we're fine. You can take the range trade in here. You got suitable informations that we're in a range. Normally, you're fine. All right? So all you need to make sure is that the range context is the right one. So we need to review in time. Remember the steps: information, technical information, recent price analysis to figure out the most possible context you might be using, and then verifying that this context is true by scrolling back at how prices have been reacting. So now we're here. Where do we come from? We come from the resistance context, which came from the support trend channel, not context, back to the context channel, back to the opposite context. All right? So what is this? Does it really matter? No, it doesn't. So we're actually doing this. All right? So what happened afterwards? What happened in there? Oh man, unfolding contexts multiple times in a row. That's an excessive market behavior. Right? You know that. So in here is not a trend. It's an excessive market. So we had somehow a market excess that we very likely going to have to explain with the global context. So in here, the context analysis has just one purpose. You need to figure out if this is just noise, or if this is just a breakout on the higher time frame, and therefore we're going to go lower, or if this is the end of a trend that was ongoing for a longer period of time, all right, which just had an excessive ending. All right. So out of those multiple conclusions, if you get that this is just a market excess, nothing less, nothing more, like the market had to digest a catalyst or something like that, all right, you're fine, you can take the range trade. If you figure out that there was a long trend and this is just the end of this trend, then you're fine. I mean, if this is a final excess, then you can trade the range. If you figure out that this is a breakout and there are way more bearish potential and still way more supports to break through on the higher time frame, then obviously you don't take the trade. All right. So in here, is there a range trade? Yes, but it needs confirmation from the context. But mostly, and I can tell you this asset, I know about it, this was just an excessive market, so we're likely going to digest in here. We don't know yet what it was going to look like. Can be a triangle, can be an ABC structure breaking to new highs, so we don't know. All we can tell in here is that there is a low risk range trade. Sorry, and that's actually all we care about. Alright, you're not trying to forecast the future, you're just trying to narrow the risks for you to be proven wrong. So that's a neutral range in here. And that's a low risk trade for everyone, but you need to make sure that the context is suitable for this. Sorry, I think I haven't answered, I haven't given you your answer. So for the question number 1, the bearish range was the most common answer. 41% of people have been answering this. 25 have been saying neutral range, so most of 2/3 people were right in here because that was the 2 acceptable answers. In here, question number 2, you guys have answered mostly 63%. That's a massive for neutral range. All right, and others have been saying for 13% the bullish range. So it makes an approximate 75% good answers, just like the first question. So very fine. Like I said, 3/4 of you guys are doing good answers, at least answers close to what is the most likely going to happen. So that's good answer. Question number 3. All right, let's do the same old job. All right, what do we have? Context. We've got the price okay in here, all right? Momentum signal and sine wave, all right? So it is a gray momentum signal, which means we need to be on a technical area. We're dealing with that resistance, so that's okay. So we've got a momentum signal. We've got a context alert in here as well, which means anyway, prior to trading, you're going to have to deal with the context to just make sure that what you're highlighting as a possible context is viable. All right, the context alert doesn't say you can't trade. It simply means you have to verify the informations on the high time frame just to make sure you're just not out of every standards in here. Because sometimes it will happen. What you'll see in here will make absolutely no sense of what happens on the bigger picture. This is why this context alert exists. All right. Simple as that. Anyway, let's get to it. So in here, we're going to try scrolling the latest 40 bars or something like that. So we've got price reversal out of a target price. Oh man, we've got pretty shitty momentum signals in here. So that should ring a bell. All right, these types of signals generally are the things you'll see on a breakout trade. So there is a risk in here. We've got your breakout targets. All right, so could this be an accumulation? Damn it, yes, it could be. We're dealing and we're trading out of the support, out of the trend channel, and we're oscillating close to the resistant context. So is there a risk for breakout in here? Yes, there is. So same here. The context will probably provide you the information because we don't have enough information in here to actually say, are we on the verge for a huge breakout, or did we actually break out in here? All right, so we need to scroll back in time. All right, do what you want with what you have to do in here, as I can't provide you the context. All you know is that you're gonna have to verify. Though I'm gonna have to search for clues. All right, it's searching for hints. So I'm scrolling back in time. All right, so yes, we have in here a danger for accumulation. I can definitely see that. Anyway, we're going from resistant context, which has been resistant in here, to support context. So this is the current move. Anytime we try to resist and to try to break the resistant context, it failed. So in here we're trying as well, but so far we might just fail in here as well. All right, what has been happening before, we went from support context to resistant context. Anytime we tried to break, we failed. All right, so it was a failure. All right, we don't see any breakout in the context boxes. So yeah, context to context, bears are failing to install a trend. Bulls are obviously approximately or very likely failing as well. That could be just a bearish, a neutral range. All right, 76% Fibonacci. We're fine. We're above resistant context on top of 76% Fib with what looks like a range. So yeah, I'm sorry to say that, but very likely going to be a range trade in here as well. You just need to make sure that there will be no breakout in here, but you have to figure out the bigger picture. If this is an accumulation on the higher time frame, then we can have a breakout coming right after. But you're really going to have to validate that information. So far in here, you don't have enough information, and I would say it's by studying this that you actually got the right answer. Remember, we've studied that and that. Now let's talk about this. What is that? All right, we can see in here prices were oscillating, very likely ranging. Then we fuck up breakout targets. We get to push, push, push. We've got unfolding context boxes. Though it could be an excess, all right? Could be a market excess. It isn't because we're pullbacking and final accessing. So in here is a trending context. So you were bullish trending in here. So you're very likely just digesting in here. You don't know what this range will look like. All you know is that you're not going to target anywhere below these prices. Simple as that. The neutral range, you take the fucking trade, you profit take in here, and you let go with the rest of that trade. It's pure noise. This is range, so you don't try to make any sense of it. All you know is that in here is a low-risk bearish entry. It still is risky because, yes, this could be preparing for a bullish breakout. So you know that anyway, if things go out of control and start to accelerate, you're definitely taking your stop losses. This is not the kind of scenarios in which you're going to put them away, right? If we ever get out there, you're fucked. So market has to reverse in here, right? You can't go anywhere below this target in here. If you get multiple candle closes with breakout candles, you just get the hell out, all right? Question number 3. Neutral range. This one is risky, obviously, though I would say experienced traders only, or actually no, I would say everyone. I mean, that's just, you just need to make sure that the context is what we said. So we need to verify this trend on the higher time frame. But all right, I think we've got more than enough information in here. Like these areas can't give you enough information. But this one says you very likely had a trend breakout in here, which means you're just probably consolidating that trend at the moment. Sorry, I'm just going to need to delete that. Question number 4. All right, same old job. Price okay, momentum sine wave. This is a taking profits and overbought structure. We do have our reverse triangle, we have a target, and we're trading inside the resistant context. All right, we're not above, we're trading at Fibonacci 61%, so this can only fit one scenario. I mean, if that is a trade, then can be just one thing, the bearish range. So you need to make sure that you are in the bearish range, otherwise you can't trade that. So we need to scroll back in time. Where do we go from? We go from support context, and afterwards, and previously, sorry, we were going from a market top in here, which is very likely an excessive movement. Anyway, it looks a little bit parabolic, all right, so it's kind of a FOMO trade happening in here. So we're probably consolidating that excessive trend, all right. So anyway, what we care about to differentiate bullish range, that bearish range, is how do we behave on the way down. We broke the support context, installed multiple candle closes, and broke the support context boxes. So in here, bulls are lacking of control, bears are still having it. So 61% signal, trending signals, like we're overbought below resistances. All right, we're trading with the resistant context. We're very likely in a bearish range consolidative move. Very likely going to do this. All right, so same old thing. You risk manage in here. You confirm your trade there, and you profit take anytime you are below this support out of a probable supportive area. And anytime you are below context, anytime the market will try to break below context is where you're going to profit take this trade. All right, but in here, very likely going to be a bearish range. Though, yes, it's okay for green guys. It's not okay for white guys. Remember that the white guys don't trade the bearish ranges. All right. Question number 5. All right, same old job. Price okay, context, momentum, and sine wave. This is a taking profit context. We do have the price reversal. We did have a target. We just dipped a toe below the support context, and we're dealing with 76% Fibonacci retracement. What does that look like? Typical range trade. So let's figure out if we do have a range context. So scroll back in time. From support context to resistant context, and from support context. All right, that's fine. All right, though it can definitely be a range trade. As you can see, anytime we try to fuck up the resistant context, somehow failed. All right, so in here, even if we try to accelerate, it's been rapidly unveiled. We still managed to unfold the context resistant boxes back in those days, but not significantly enough. Like this was probably due to a catalyst. As you can see, this market is pretty noisy. So in here, really not enough information for a bullish range. I mean, anyway, we're dealing 76% fib, so we're going to trade that as a neutral range anyway, just for safety purposes. So in order to make sure that we're fine with that, we need to analyze the previous wave. And what does that look like? All right, I would say, all right, target broken down, context boxes unfolding multiple times. All right, yeah, I would say that's probably a trend trade going to happen in here. Accumulation, breakout, possibly the pullback, very likely, and this would be the final excess. So if that is the final excess, this is definitely a range trade, typical wave, third range boundary. So you do want to take those trades. These are like exactly what you need to be able to see. All right, this is not sure. Remember that you're going to have to check with context to make sure that this was a trend trade and that this trend trade is mature. And if that trend trade is over, then you're very likely in a range, and catching up that third range boundary is what you need to do. All right, back again, neutral range. Yes, for everyone. Just need to make sure that this trend is really over. Oh, damn it. Hell of a windy session today. Anyway, question number 6. Though we now delete the prices, but still, I give you like the 40th latest bar, and the rest of it still can get you informations. Anyway, so let's do the usual job. Momentum. Oh, no sine wave. So let's have a look at our sine wave behavior. It doesn't really look that bad. So I would say sine wave is okay. It's just in here the indicator hasn't been figuring it out. So I would say sine wave still okay. We've got the price okay, the triangle. We had a sine wave breakout target. We're dealing between 61 and 76% fib. We're right into the resistant context, but not above. All right, we're touching the resistant context. So what we do have an overbought cluster and momentum below resistance. So we're overbought below resistant in the resistant context. Between 61 and 76% fib, we had sine wave cyclical breakouts. Yeah, what does that looks like? What does that sound like? It should ring some bells. Personally, it's ringing a bell for a range trade, a bearish range trade. So I need to verify if that context is tradable. All right. Remember the difference between the ranges and the neutral ranges, and the trending ranges is that, first of all, we need to make sure that this is a range context, and we need to make sure that in here we broke below the context. I would say in here is very likely have been the case. As you can see, in here maybe not. We might have just dipped the toe in here, but here is where the bull somehow surrendered. We probably have installed multiple candle closes in here, and we unfolded the support context afterwards. So in here, very likely possible bearish range context. But we still need to make sure that this is a range. In order to make sure that this is a range, we need to make sure that what happened before is either a trend termination or a bigger range. So in here, yeah, I would say pretty much looks like breakout trade in here. They'll breakout, divergence, pullback, final excess. All right. So yeah, is that trending move likely to be terminated? Yes, very likely. Though, are we going to consolidate this bullish trend? Yes, very likely. How do we look like to consolidate at the current time? Looks like this is a range, and it looks like the bears are stronger than the bulls in terms of balance of power. So we're very likely going to have a bearish range in here. Simple as that. So can you take this trade? Yes. Obviously, you need to be experienced a little bit, so not for white guys, only for green guys, but this is definitely the type of trades you can trade as a trending range. All right, so same thing. Right? This is where you validate, this is where you'll confirm, and this is where you'll profit take. Okay? Simple as that. You're going to search for a supportive area in here, obviously below the previous low, and you're going to search for signals below the support context to profit take. All right. So in here, bearish range. Can we take that trade? Yes. Question number 7. All right. Context, price okay, momentum, sine wave, squeeze, divergence. Sorry. So hidden bearish divergence. We're trading on the trend channel with a price reversal. We had a sine wave target. All right. More than enough information to highlight a potential context in here. What is that? It's certainly not a range. All right. This looks like a pullback trade. So in order to highlight a pullback trade, you need to validate the fact that, right, always think about things this way, all right? If you want to be forecasting all of the ranges, make sure you're not in there, all right? So make sure that if there was a trend, the trend is over, all right? Make sure you're not in an excess or in a bubble, all right? Though you always, you don't think the way that you find the answer. You never know. You never have the answer. What you do is that you limit the risk for others' answers to be true. Like, if you want a range, make sure that you're not in a trend. It's how you think. If you are in a trend, make sure you're not in a range. And if you are in a trend, make sure that if this is trend pullback that you're highlighting, make sure that you have divergence, breakout, and accumulation already visible. All right? So that's what we care about. If we want to validate a trend pullback, and we need to make sure that we have a trending context. So we first have a look at the fucking breakout. Is there a breakout? Yes, in here. As you can see, the trend channel was so narrow. We fucked up trend channel. We fucked up trend breakout targets. So yes, there is very likely a trending context going in here. The accumulation is pretty wicked. It could have been done in here. Quick accumulation. Anyway, there is a breakout. We're fucking up support context, definitely. All right, we're accelerating the trend channel. Though in here is really, really a breakout context. The divergence, even though we can hardly see it, probably has happened in here. So divergence trades, yes, we're perfectly doing the pullback. What are the pullback rules? Minimum 23% retracement and daily closer to Fibonacci retracement. So the 38% Fib is right on top of our heads. We already have the signals. So I would say we take that in a risk management, which means we take the trade right now and just accept prices to go deeper to slightly higher. Like we could have upper shadow candles just to reach out for the 38% Fib. All right? So that's it. In here, the context alert, you can't deal with it. You already have more than enough information in here suggesting that I don't need to zoom out. This is very likely going to be a trend trade. This is very likely going to be, God damn it, this is very likely going to be a pullback trade, reaching out to the support context again. All right, so this one wasn't a range. Maybe, I don't remember why I put it this one. Maybe I just wanted to make something different. But this is a trend pullback, and only experienced traders can take that. Question number 8. All right, context alert, price okay. You've got the triangle, even though it's a little bit hidden behind the bars. We do have a range breakout in here. Momentum's okay, sine wave's okay. We've got a squeezing momentum right after a taking profit pattern. So, what could that be? We're dealing with prices in the context. We can't go out, right? It's just shadows trying to get out. So we're dealing in the context between 61 to 76% fib. So, what does that look like? Look like a bullish range trade, right? So if that could be a bullish range trade, and we need to make sure that the bulls have been significantly had more strength than the bears during that range, and we're going to have to validate the fact that this is a range. So we need to scroll back in time. We go here from the resistant context, and we go from the resistant context from the support context. So we do have our potential third range boundary system. We just need to make sure that whatever that is either a range, all right, on the bigger picture, or it's the end of a trend. So we don't know. This is why we've got the context alert, and this is why you need to zoom out to make sure of it. But we're going to assume in here that this is fine. So as we assume something, obviously we're going to take tinier position sizing in here, unless we make sure that we're dealing with either the end of a trend, the bottom of a range, or anything that suggests we can reverse out of this area. All right? So now we have a look at the balance between bulls and bears to validate the potential range, bullish range trade. So in here, as you can see, we somehow, anytime they try to dip a toe, it's been reversed. Try to dip a toe, reversed. So yeah, the bears are pretty weak. Are the bulls stronger? Oh yeah, we're fucking up context. We're fucking up breakout targets. So yeah, in here, the bulls were strong. That didn't manage to install a trend, all right, which means in here, that wasn't a breakout. It was just a false signal. Probably a catalyst has been pushing the markets higher, right? It definitely looks like a range trade. But I would say, yes, the bulls have been significantly, just look at the context boxes, unfolding in here, unfolding in there. So yeah, this bullish upward move has been strong, even though not strong enough to install a trend, which means we're in a range. And here we are, retracing 61%, having range trades, having signals, having take profit. It's just a squeeze, so that's tricky. That trade is definitely really risky, but I would take it. Eyes closed. What I would do instead is that, as this is a squeeze, I would certainly not take the trend channel as a stop loss reference. Like putting a stop loss in here doesn't nearly make sense to me. I think in here doubling that stop loss is absolutely necessary for multiple reasons, because if that isn't a bullish range trade, that could just be a neutral range trade in which we can go there, trigger a signal in here below the context, and buy again. Though going in there would still be right, and putting a stop loss in here would just be stupid, all right? Though I think in here, if you take that kind of trade, make sure that the squeezing alert in here makes you double the stop loss sizing. If you're a beginner, obviously, within that kind of context, when you've got multiple alerts, I suggest you go safe, which means you really wait for 76% fib. And even if that means you probably will lose that trade, you're probably going to miss the trade, then that's it. You'll miss plenty of trades, and you should be fine with that, all right? So I would say in here, okay, but for experienced traders, others should wait for 76% fib. So it's a bullish range or neutral range. I'll accept both in here because it's really indecisive. But I would say anyway, if there is a trade, it's only for experienced traders. Context number 9. All right, same old story, price okay, context, momentum, and sidewave. The context alert, you'll have it pretty significantly almost all the time when it comes down to range trades. So that's normal for the context alert. Just means any fucking way. Prior to do anything, you have to zoom out, all right? That's all it says. It's not going to be all the time, but most of the time. So when this happens, don't say, all right, context alert, so I shouldn't take the trade. It simply means context alert, zoom the fuck out to make sure that you really can trade that range. It's simple as that, all right? That doesn't mean you can't trade. It simply means you have to make sure to zoom out that trade to have a bigger picture. All right, we've got a divergence signal, blue arrow. We overcome the breakout range target. So that's not a good sign. Breaking through those levels should ring a bell. We're fucking up the context. So in the short-term price action, something is violently bearish in here. So in here, it doesn't really smell good. We're dealing below 76% fib and we are below context. So it could be a range trade, yes, but this one is a tough fucking one. So let's zoom back, let's scroll back in time because we need to gather information before doing anything in here. So we come from resistant context, and prior to that we're coming from the support context. All right, so yes, could be a typical range trade, but we need to make sure that this dip is the end of either a trend or the bottom of a range. So does that look like a trend? I would say possibly yes, but there's no pullback. So in here I don't see pullbacks, which is dangerous. I don't see range breakouts. I don't see breakout trades being broken down in here. So that's really an odd way for a trend. So something really doesn't play according to the usual plans in here. So I would say zooming out in here is absolutely necessary, because I will tell you what that is actually. This market in here is just a big, ugly, fat bearish range. It's got mature in here, which means, yes, that's the kind of boundary you can trade as a reverse, because that was a bearish range in here, 2 sets of waves, terminated in here. So we have a mature bearish range, which means this can be a reversal, and we can go just for a reversal, all right? So in here, I'll tell you what happens in the context, but you really need to verify that, all right? So as you can see, this doesn't look like a trend, because that wasn't. That was just a bearish range just terminating itself. We had the same thing going on in here, right? So 2 bearish, ugly bearish trends. So it was looking like a trend, but not a trend. Looking like a trend, but not a trend. So this was actually a bearish range. A very, very brutal bearish range. But in here is the bottom of that range. So we're fine. So yes, in here is a trade, but I would say only for professionals. All right, this is a typical range trade, but this one is freakingly risky. Moreover, we're dealing with potential breakout of range targets, so that's tricky. There is a lot of red flags in here, which means if you're a beginner in here, even if you're green, you certainly don't take that type of trades. It's only for experienced traders, but I can tell you I would take that trade. Not you. You can't do that. Way too dangerous, because this could just be the the continuation of this trend, which means even if it has been doing 4 waves, like 1, 2, 3, 4 waves, though it's mature, you can't trade it anyway, meaning you can't sell this area, but that doesn't mean this range can keep on going and making new lows and stuff like that. So in here, high level of risk taking, though only experienced traders will take that. And I'll certainly not take 1 to 2% risk in here, probably 0.5%, no more than that. All right, though to me it could be neutral range, but it's only for experienced or pros. All right, I would say only pros in here, just to make all right, only experienced. Question number 10, final one. Let's get through this. All right, so price okay, no momentum, no sine wave. All right, that's funny. I would say sine wave seems to be okay anyway. I see the big sine wave in here being in a reversal area, so just the algorithm hasn't been detecting, because it probably hasn't been detecting any momentum signal. So anyway, we've got nothing to trade, all right? Could be a divergence in here, but really I would say not that big. We do have a range target and a red arrow. All right, that's all we've got. So that's really not that big. In terms of risk limitation, all right, very, very, very slight informations. We're dealing with between 61 to 76. We're slightly on top of the resistant context. All right, so first of all, getting in here, I would say, do we really have to go anywhere further? I would say all we can do in here is waiting for 76% to be tested. All right, that's what I would do. It really looks like a range trade, but anyway, we don't trigger that trade right now. We're going to go along with the analysis anyway, just to figure out if there could be a range trade forthcoming, but certainly not right now. All right, so we go from support context to resistant context, from resistant context to support context. We were coming back from the resistant context previously. All right. As you can see, we didn't manage to break the context in here, just slightly in here, but that was just the end. Like you can see, we might have just purged and reversed. So the bearish movement isn't really trending. It's not really strong. So very likely a neutral range in here. So it's not enough for a bearish range context, all right? Not enough bear strength to say the bears will likely resist in here. So yeah, waiting for 76 really seems to be the case in here. Now we need to make sure of one last thing. What the hell was that? So making sure that that is either the end of a trend or the end of a range. So, okay, breakout detection, breaking through targets, all right? Even though that might be a little bit excessive, same thing in here, probably a market catalyst, we managed to make a pullback and final excess. So yes, we have the end of a trend in here. First bearish movement, but not that strong. Bearish movement consolidating it. We're very likely waiting for 76% fib and another signal in here to take a typical range trade. All right? So in here, it's a neutral range context, but no, we need more informations. All right? Sorry, I didn't comment on your answers. God damn it, I'm stupid. So let's go back in time to figure out. Sorry, I just got a little bit too fast. So question number 3. All right, this was neutral range. Most of you guys have been giving that answer, so you were fine. Question number 4. This was a bearish range. More than 60% of you guys have been giving that answer, so I'm pretty fine with that. Another 15% of neutral range, which makes 75% of people right. Question number 5, you guys have been giving 72% of neutral range, and that was exactly it, so very great. Question number 6, 62% of bearish range. That's really great that you guys can highlight those trades. And 18% of neutral range, so more than 75% people were right in here. And as I teach the beginners to don't trade the bearish range or bullish range, if you answered neutral range because of that, I'm totally fine with that, all right? Like, you're not making bad choices, all right? Question number 7. Oh, you were 66% to find the pullback, and I'm really fine with that because that's a tricky context anyway. So that's fine. Question number 8. All right. Question number 8, I gave the bullish range context. Most of you guys have been answering neutral range. So you would say we wait for 76% fib, and I would say that's totally fine because, like I said, anyway, there is a squeezing alert, so we can just squeeze out of 76% fib and go higher. But anyway, I would personally take the trade anyway with a larger stop loss. 17%, 18% have been saying bullish range, so I'm fine with that. That makes globally 70% people being in the right direction, so that's really fine. Question number 9, neutral range. You guys have been giving me neutral range for 25%, 24%, sorry, and the bearish range for 30%. So those who figured out to be a bearish range, like keep on going, I'm totally fine with that. Right? We can still be in that bearish range, but if that is the bottom of that range, you can still figure out a possible bullish range context, ranging context, neutral range. So in here, both of those answers are great. Like the bearish range, yes, still true because we're still resisting in here and we somehow reversed inside the resistant context, which makes a high risk of us going down. Like we said, we still have a target in here that we broke through, so high level of danger within this trade. Still, I think it's doable with a low risk taking. So both of your answers are good as well in here. That makes more than half people going in the right direction. Question number 10 was, sorry, definitely neutral range to me. And in here, 48% have been saying bearish range, and I disagree with that. So the mistake you've made in here, if you gave me the bearish range answer, is I think this. Remember that to get a bearish range, you need to make sure that one of the two forces in place are really way more powerful than the other. And I would say in here, we've got some bull's power. We can see that the market has been going from support to resistant context pretty quickly. And as you can see, the bears, even though how long they took the handover, the bulls, they never managed to significantly accelerate prices to the downside unless the very late stages. So I would say, yes, what you're missing here is that for a bearish range, we would need more informations. We would need more than that, more bearishness, and most likely the very light cluster of informations that we have here, like just a range target, no momentum confirmation, makes it a little bit too risky to get in here. So I would say, yeah, just wait for an inch higher in there for the 76% fib to be tested. All right. But anyway, as the second answer is, do you think this could be a trade? Right? 33% people said yes, but for experienced traders only. And I would say, obviously, but even for experienced traders, we would still need to wait for a momentum confirmation. And another 33% said it's interesting, but I just need more information, which is definitely, I think, the right answer in here. We're close to a trade, but certainly not yet to it. All right, regarding your personal guys feedback, you said 46% of this is normal. Oh, sorry. Of this is a normal difficulty level or high, and in which challenge is good. So I think we're decently balanced in here, so we're going to keep on going this way. I'll take a little bit of time to read your feedback. Obviously, I always read it. But anyway, thank you for participating. I was clear about that. If you guys don't interact with those things, I will stop doing them. I'm fine. You were approximately 100 to answer those questions. So thank you for your feedback. Thank you for answering. Thank you for taking the time. Remember that we're all winning with those things because you can learn from the mistakes you've made. If you made some, if you made no mistakes, then you're just going to consolidate your knowledge. And anyway, I myself is gaining a lot as well because I get to understand what you guys are good at or bad at, so I know what I'm going to be working around over the course of the next podcast. Now I can definitely figure out that you guys are pretty good at range highlighting, so I'm pretty happy with that. That means the job and the work I've been putting in motion a few weeks ago to get you guys better at range assessment freakingly works great because I haven't been picking the easiest contexts in here and you somehow manage your way on them. So I think that's good, and I'm happy with the work I've done. There's still a lot to do. It's never done. It's never finished, but I'll keep on heading in the same direction. All right, bye guys. Have a good day.